Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Uflex Limited, which is trading at only 3 times. And let's understand whether you should buy this stock or avoid it at this point of time. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Uflex, here's a small reminder that kindly support me on Patreon, and on the Patreon network, you'll be able to question me on your stocks or portfolios, as well as you'll have a lot of articles to feed on. I'll write articles on different types of stocks, their buy, call, sell ideas, and their stop losses. And there are different tiers on the Patreon network, so go ahead. The link is in the description and at the end of the video as well. Kindly support me through with a $2 to a $10 support, and that will help me a great deal in building this channel further. Uh, so kindly support me there. Now about Uflex, it was established in 1983 and they are the largest flexible packaging company. So they provide packaging films, flexible packaging materials, liquid packaging, chemicals in engineering services, and etc. They have global presence with businesses in US, Canada, South America, UK, Europe, Russia, the CIS nations, South Africa, and other African nations. So they are spread across continents, and probably this is the reason why the stock has been beaten down to pulp because of the kind of COVID virus and what is going on across the globe. Global companies are under stress, and these were the companies which are doing very well, say 3 4 years back, because they were global companies and earning in other currencies, and the global economy was doing fairly well compared to the Indian economy, which was dwindling down, and now we are at 4%. The market cap of the company is around 1350 crores. If you look at the financials of the company, the sales have gone down by 7%, but the profit has increased by over 50%. And this is due to a couple of reasons. One is that they did not have to pay a lot of taxes. So the tax thing had come down this year and this quarter, I mean December quarter compared to last year, as well as with operating efficiency and lower raw material cost. The cost of raw material had decreased because of oil prices going down and remaining in a range, and perhaps it will go down further with respect to the March quarter numbers. So all these factors really weighed in with the kind of numbers on the bottom line. The return on equity is not that great at 7.5%, but the operating profit margin at 15% is decent. The promoter and institutional holding is around 80-82%, and only 18% free float remains, which is good that we have high institutional and promoter holding in the stock. If you look at the performance of the company, then the stock is down 50% from its 2018 peak, and it has been relentlessly coming down, although it has surged on Friday with a 7-8% move, but it has really come down heavily over the last 2 3 years. And there is no stopping, and even when the valuations looks attractive, it is trading at only 3 times earnings. The market cap is around 1000 crores, yet there are no buyers, and there would be reasons for that. And one big reason is this COVID virus, which has hurt companies which are exporting abroad. So you look at auto ancillary companies which are exporting products to Europe, or you look at diagnostic companies or companies which makes you can say provides IT services or even makes drugs and exporting abroad. They didn't do well, but now the pharmaceutical companies are doing well. But any company that is related to businesses in US or Europe is getting hurt big time at the moment, and Uflex is no exception. So you have to take that into consideration. Currently, it is trading at only 3 times earning. When I made this video, it was trading at 4 times earning, but now it has come down to only 3 times its EPS, current EPS, which is ridiculously priced. The return ratios are attractive, but these are very average, but these levels are very attractive to invest into. If you look at the technicals of the company, then there is strong support around the 150 rupee level, and the 200 daily moving average is around 216. So it has been totally beaten down to smidgens at the moment, and 216 is the 200 daily moving average. So any move, any good move that takes place around 155 160 levels and it breaks out, we could easily see 200 210 levels come in. There could be strong resistance around the 216 or so levels, yes, but we can easily play for a small trading move from here till 210 only when the market supports. So when I was looking at the markets, the Dow futures is down around 4-5%. So we could have a gap down opening, but we need to see how things pan out. But because of the lockdown that is taking place in India, and the fact that it looks like the lockdown is going to continue into deep into April 15 20th of April, uh, things are going to get even worse with respect to the markets, and probably these will be the times, the next 2 to 3 weeks, which is the most difficult for India in terms of the virus spread. And if we can control that, will come out trumps by May, and things will really look good. So probably in the next 3 weeks, do not get into the stock that quickly, but look at the situation, and then probably we can trade with a stop loss for it to go to the 200-day moving average. But again, look at the situation on ground with respect to the virus, and only then get into any stock. The promoter holding is at 44%, but the complete institutional plus promoter holding is around 82%, which augurs well. The stock looks extremely weak on charts, and in that respect, it looks like you should not be buying on long term basis. There are a lot of resistances around 195 to 210 levels, as I said. So only long term players can get into it only when it crosses 210 to 15 levels and closes above it. So do not buy before that. If you want to buy for 4 or 5 years, then buy only when technically it looks extremely strong. Yes, on a trading basis for a week or 10 days, if it crosses 160 165 with heavy volumes, then you could see 20% up move and a level of 195 odd pretty quickly. But again, the markets need to support this sort of a move, and only when the market remain positive and small and mid caps really do well, then get into such a stock for even trading. Otherwise, avoid these stocks, avoid the market as a whole for the next couple of weeks, because this is going to be extremely volatile, and we could see volatile moves on both the ends. So what needs to be done? If you have the stock, then average at these levels. Yes, for sure, you can average around 150, 145, whatever lower levels you get. Do not buy fresh, as I said. Let this volatility come down. Let all this pan out, go away in the next 2 3 weeks, and let the markets open again and businesses open again at full throttle, and only then get into these stocks. Look for other consumption plays. So if you have not bought Uflex, there's no point looking at it, because the numbers are not that magnificent. Although it looks like on the bottom line that it is good, but it doesn't look that it is one of the companies that you would really yarn for. There are other larger companies which have come down a lot. So look at those companies. I've talked about them a lot in my other videos. Packaging companies may benefit from the oil crash, that is for certain, because raw material of packaging companies is oil, and probably that would help. But again, look for big moves and only then get into the market when the market settles down. Have only less than 5% of your exposure in such companies, and trade only in the company when the market sentiments really revive. So this was my video on Uflex Limited. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.